This week has been absolutely insane for Cardano DeFi, and in today's video, I want to show you a ridiculously broken part of Cardano DeFi that has just launched, and that is Liqwid Finance, and some very interesting numbers in terms of APY that people are seeing on the platform currently. First things first, though, if you want to earn some APY natively on Cardano by staking your ADA, you can do so by staking with the Jack stake pool. Now, what we're talking about today specifically, although Cardano's native staking gives around 3.5 to 4% currently, is a bit better than that at current rates, although they may not be stable, and we're going to talk about that in today's video, but it is kind of a bit ridiculous right now of how much APY people are seeing already on this open liquid finance platform for lending and borrowing and pooling together liquidity in a simple way, being able to just press a few buttons and lend out your ADA and receive interest on it. Also, before we dive any deeper into the video, I want to mention what Whale said in his tweet here about Liqwid Finance. There's a lot of things going around about Liqwid and their UI and it being very simple so far and not a huge app, but in reality, this is a huge delivery in Cardano DeFi. This is the first liquidity protocol with pooled lending, and that makes things a lot easier than just peer-to-peer lending and variable interest rates in eUTXO context. So in Cardano's native model, extended UTXO context, this hasn't been done before. So there's actually some real innovation here, and engineering has gone into this overall. And in terms of the current UI UX you're looking at, this is the literal tip of the iceberg. But nonetheless, I am here to help explain and go over the current UI and UX on the platform and just tell you how it works, as that's the point of today's video. So Liqwid Finance is a lending and borrowing platform, and the APYs on it right now are pretty insane considering that it is only ADA being borrowed and ADA being supplied, and native tokens have not yet made it onto the platform. Now, you can now lend and borrow currently on the platform. You cannot farm or stake currently. This is being upgraded and updated. This is a mainnet beta release, so keep that in mind. But going to the platform now, you're going to see what I see right now, right? If you go to this and you haven't supplied anything. Now, I have tested with some supplying and borrowing, but we're going to do it today together and just show you how it works. But as you can see right here, the APY currently I'm recording this video for supplying ADA is around 4.27%. Now, you may think, hey, you just said that your stake pool is around 3.5 to 4%. And yes, this is true. And you may also think that, hey, is this just like staking, but a few extra percent? Well, actually, no. As we can see here, does the APY for lending come on top of staking rewards? And this is yes. So this means that if we go to Liqwid Finance, this APY reported by the team is not calculated, including the interest accrued from staking rewards. And when you supply ADA, you are also getting staking rewards on the ADA supplied with 16 different pools that are single SPOs. Any ADA that's not being utilized in the market to borrowers is staked to those stake pools and is earning you rewards on your ADA. You are getting more APY if you do supply ADA here, and you also get staking rewards. I don't believe it will be the full effect, as market utilization also puts some of this ADA to borrowers, but you do get staking rewards plus APY, what is reported here, and this becomes your total APY. Your net APY will still be just the APY that you're getting from supplying or borrowing combined. It may go negative if you're supplying and borrowing, as you will have to return some assets, or APY will be negative. But in short, the net APY here does not include staking rewards. So there is some pretty nice yields going on right now. However, I can't be sure that they will be sustainable, as if the borrowing rates for the ADA supplied goes down and there's less people wanting to borrow ADA or assets on the platform, the APYs for supplying them will become less and less, and also just more saturated because there's less borrowers who want the ADA supplied. Now, before we go into the platform and actually use it, I want to just quickly put an understanding about how it works and what is functional right now on Liqwid Finance. I previously made a video on 6x yield for Liqwid Finance and how it works, but I briefly want to cover what the intentions in the future of the platform may look like, as well as comparing that to what it is looking like right now. We can see that for ADA staking, the APY since the beginning of Shelley era kind of went as it follows. At first, it was around 15 to 30%, then around 5%, and currently, the average staking reward is around 3.5%. ADA supplied to Liqwid at a 60% market utilization or above. Right now, I believe we're at 40 as last reported by Liquid Finance, about 6.1% to 178% APY. This is ADA supplying. So right now, we're below the 6.1% on the Liqwid app because we are below 60% market utilization, around 40% market utilization. So keep that in mind. If the market utilizes more of the ADA being supplied, the APY goes up. Otherwise, it will go down. So vice versa, that is how that is calculated from a short, simple point of view. And yes, that means that if there is 9 million ADA in liquidity here for assets to borrow, that 40% of it is being used and the rest is not. So if a lot more liquidity comes in through supply, you can see how easily this could be saturated by one or two big deposits in supply. And thus the APY can change quite volatile direction up or down depending on these factors. Nonetheless, this is kind of a base on-chain yield in Cardano, and it is nice to have as you also get staking rewards on top of this, but there is more risk to me in something. You're putting your ADA in a new smart contract, you're putting your ADA on a platform. This is not natively through Cardano. It is on a Cardano smart contract, but it does have inherent more amount of risk, but there also is more reward there. So you're gonna have to calculate whether that's worth it for you or not, and also keep track of your own positions, as this is not going to be just a free 4% APY the whole time. I'm pretty sure as more people come into the market and supply and borrow, the APY is going to change quite drastically. It is pretty hard to predict where it's going to go in the long term and the average of the APY, but so far the APY is kind of ridiculously high in my opinion, and it is a good opportunity for the time being. But keep in mind, this is APY, the annual yield. So this has to keep up for a long time to give you that APY. And in the short term, with a couple hundred ADA or a couple thousand ADA, it won't be that much in returns. Right now, of this 6x yield streams, we only really have 2x yield streams. That's okay, but it is interesting to see where the protocol is going towards. And at the moment, we have supplying ADA to the liquid market, and you get staking yields from your ADA still. And then also the Q ADA that you mint by supplying is what accrues you interest to the borrower. And those are the two yields we have right now. Now, the more we can look forward to is staking this Q ADA to earn LQ governance tokens as your ADA supplier and staking yield grow. This is not live yet. And then after that, that LQ, you can then stake it that you're earning from your staked Q ADA in a safety pool to unlock voting power and earn a share of protocol revenue plus more LQ, so another yield stream. Then after that, you can provide liquidity on a DEX to the LQ and ADA protocol, and it generates LP fees. I myself don't really want to manage a position like that, so I probably won't be doing that yield stream. But on top of that, there's also the staking of liquidity pool tokens to earn the DEX's protocol governance token and LQ from any Liquid DEX incentives program. Now, those last yield streams, they're not as attractive, but these two right here, for taking part in the ecosystem and staking your Q ADA, which you get from supplying ADA to Liquid Finance, is another nice bonus yield if LQ's price is worth anything, as there has been a lot of talk of emissions and things going on thus far. But nonetheless, it is an extra yield stream. Is it an infinite money machine or is it an infinite liquidity machine? No, but it is something that is added on top and just nice to have on top of the already nice yields you get from just supplying ADA to Liquid Finance. Now, as I mentioned, there's only 2x yield stream right now in Cardano, but there has been announcements of SundaeSwap utilizing the rewards distribution system for LQ and partnering with Liquid Labs. So this is going to accelerate the growth of those 3rd and 4th and 5th and 6th yield streams as this progresses. Finally, before we dive into the video on the actual tutorial on how to use the platform, we're going to go over the parameters, as these are pretty important to know. Keep in mind that what you see here is the mainnet parameters for the beta release, the current release as of making this video, and they may change since if you're watching this at a later date. The main things to note are for borrowers, as the fees for minting and burning and staking and supplying aren't really too much, except for the minimum amount of 100 ADA, but the liquidation threshold is 80%, the liquidation bonus is 10%, and the market reserve factor is also 10%. Now we can jump into the actual application, which is the Liquid Finance app. Now, first things first, what we're going to do is we're going to supply some ADA. In order to borrow ADA at the moment, you have to have QADA, which comes from supplying ADA. When you supply ADA, if we click here and we've already connected our wallet, you're going to have to enable collateral too. I'll leave a playlist from JPEG Store on how to enable collateral, how to fund your wallet. If you're confused and you haven't gotten this far, or if you want to fund it from another blockchain. But in short, you have to supply some ADA. So we're going to supply 200 ADA. It's a minimum of 100, keep that in mind. And you can see here the QADA exchange rate is about 0.200. So 1 to 50 ratio for ADA to QADA. And then each QADA you own allows you to borrow that much in the next section of the video at a 75% rate of collateral. So you basically have to have 25% more than you're borrowing. So first thing, we're going to supply this ADA. We're going to make sure everything's right. Supply APY, we're looking pretty satisfied with that. Hopefully it stays like that. And we have our collateralization enabled. So we're going to supply the ADA, sign the TX, and we'll be on our way. Now, you may be wondering why this doesn't load right now in your wallet, and this is QADA, the asset we're receiving. We cannot view it as there is some backend things waiting on being pushed. After you sign the TX and it went through, you should see this message that you supplied however much ADA you have just supplied. Okay, and after supplying, you can now see in your supply section basically what you have supplied and your balance of supply in US dollars. This is about $80 worth in ADA right now, and this balance is calculated by taking your QADA and converting it back to its underlying asset to get that total value. So keep that in mind. The APY is 4.27%. Well, as I said, that just went up. And then back down again. And the collateral at the moment is 0 ADA. Basically, the Q token balance used in collateral in other borrows, which are about to perform. And you'll see how this changes as we borrow some ADA now. In order to borrow, like I said, you're going to have to be supplying so you can have collateral backed up. Now, this may not make much sense. Why would you supply ADA to borrow ADA? But this is the beginning of the DApp. Now, there may be some scenarios which you want to do that, but most scenarios this opens up for is when we have different types of tokens to borrow against one each other to long and short assets. Okay, so now the next step is going to be borrowing ADA. This is pretty simple. We just click on the borrow button here on the bottom right, and we can request up to a max of 149 ADA to borrow, as this puts us at our limit, 75% of what we have supplied. So what we're going to do just 100 ADA to keep our health factor higher, but I'll show you how it impacts it if you go closer to that upper threshold, as you will have less collateral in comparison to how much ADA you are borrowing. So we're going to click max here, and this puts all of our Q ADA, which is about 10,000, as 1 ADA is 50 Q ADA currently. And then we go here and we can see that the borrow APY is 12%. So this is the APY that we have to pay to the people supplying the ADA we are borrowing. And our health factor is at 1.59%. Liquidation is at 1.0%. Or 1.0, sorry, not percentages here. But if we up this to 149, this puts us towards our max threshold of how far we can go and how much ADA we can borrow. And the health factor goes down considerably and gets a little bit riskier, as if the price of ADA changes, we could get liquidated and lose our collateral, which is $20 more worth than what we are borrowing. But we're just going to do 100. And we are going to get ready to sign this transaction if we are satisfied with the health factor, and assume this risk is okay with us. And also the borrow API we are going to have to pay on this if we choose to borrow the ADA. If we're okay with that, we sign the transaction and we borrow the ADA. You can now see we're getting 98 ADA, basically 100. It's a bit off for some fees. And we are losing our Q ADA, which we can't see right here, but this is our Q ADA we are losing, aka this is a collateral we are putting up, which is currently worth $80 USD, and we're taking out $40 worth of USD. So we're probably going to want to repay this or get liquidated or not get liquidated so we can have our assets back. After the bar goes through, you will see a success message and you can close this tab. And now you can see that things have changed quite drastically. We can see our health factor here and our liquidation value. And we can also see our net APY has went down to negative 1.39%, as we are borrowing ADA and receiving rewards on it, but in total, we have to pay back this as well. So our net APY is going to be negative 1.39%, which is actually still pretty good considering that we're borrowing assets right now. And our borrow balance is $40 and our supply balance is $80. Finally, though, we're going to close this position by repaying it. As you can see here, we have 100 ADA in debt, and I don't really want to pay 12.72% APY, even though our net APY is still pretty good. We're going to go ahead and repay this by typing repay amount. We're going to click max, and then you can see here that we're going to get our remaining debt back down to 0, and we're going to receive our QADA back. If we sign the transaction, it'll form, and you'll see the details. We're losing our loaned out ADA, and we're paying it back, and then we're getting back our collateral, so we can go and withdraw our supply if we want after this too. Now that our repay has went through and we no longer borrowing any ADA, we can see that our net APY is back up to 4.27%, and our QADA balance is back up to 200 in ADA value, and we can then go ahead and either supply more ADA or withdraw this from the platform for now. Whatever you want to do, that's going to be up to you, but that pretty much concludes all of Liqwid Finance right now, and all of which I am capable of explaining in a thorough and hopefully digestible way to anyone trying to use the platform. Hope you guys enjoyed this video. I'm going to go ahead and withdraw this for now, maybe supply some more ADA later, but definitely keeping an eye on the APY, and we'll be messing around with the platform as new tokens come onto the platform, and also the ability to earn LQ and claim it comes to the platform, allowing for additional yield streams. Hope you guys enjoyed. See you guys in tomorrow's video. Bring your friend Jack, stake with the Jack stake pool, and earn some passive ADA if you want, or go ahead and put it on Liqwid. That's really up to you, and I want you to make your own decisions, and hopefully you're equipped with the knowledge to do so now. See ya. Peace. Later.